Hi, thanks for joining me again. Today I'm going to ask you a question and give you a little quiz. I've got a chart to show you. There's the chart. The question is, find the shakeout and the 2-bar reversal, or what I like to call the bullish reversal. Now I'll zoom in a little bit, then you can pause the video quickly and just have a bit of a look. Okay, can you find the shakeout and the bullish reversal? All right, here is a shakeout. It's on very high volume. You can see in response there's a test type bar with a reduced spread, a little bit of absorption in the next couple of bars, another little test bar that's closed up as an up bar, and then prices pushed out to a new level. And here's the bullish reversal here. These two bars here in combination make up a shakeout, a 2-bar reversal or a multi-bar shakeout. When the second bar closes above the initial bar's high, like that, there's the initial bar's high at that level. You can see the second bar has closed above it. For me, that's a bullish reversal. And as soon as you see a positive response, it's a successful bullish reversal. Let's just put this chart in a bit of context. You can see that price had been moving higher, and over here, supplies come in. Look how high that volume is. It's closed a little off its high. The next bar was down on very high volume. You'd have to say that somebody's probably exited a position here on those 2 bars. Whether it's on announcement or what, I don't know. It doesn't matter. But the next bar has seen reduced spread, a close off the low, still above average volume. Support has come in on this bar. And then you can see that if I draw a line across there, prices respected that low pretty much the whole way across. And in response, there's been a little up move here and then a second push lower. This is consolidation and absorption. This is rebuying. Someone's exited a position over here, but the market has begun to consolidate and has bought in here. And that's what's caused this little automatic reaction where price has gone up. And it's been, you can see this little part there, there's a gap. I've made it a hollow part of the bar. That's a gap down. That's a deliberate push down. So I would say right through here has turned into a reaccumulation zone. The opportunity was presented to the market by someone or some group selling here. That's allowed the market to come back. And the opportunity has been taken for a reaccumulation through here. You see price then pushes out to the highs of the range. Now, right here is where price broke down. That's that little juncture I often point out. So if you drew a line across from that, when price gets above that level, it's free of all of this weakness that came in along here. All of this weakness is done for. It's below the price. It's not going to affect it anymore. So this is the key level to watch here, where price broke down from over here. So the reaccumulation of some sort continues across here. You can see there's been a couple of attempts to break out, perhaps half-hearted at times. This was a half-hearted attempt. There's not a great deal of volume here. This was perhaps a little bit more of a challenge to the highs through here. but it failed. And at the end of this period, we see this reversal, this bullish reversal, which is effectively a shakeout over 2 bars. Sometimes it happens over more bars, but it's effectively a shakeout over 2 bars. Now, at the end of a period of reaccumulation or accumulation, if you see a shakeout, that then gives an indication of active professionals in the market. And I keep my eye out for this all the time, and you'll notice that I speak about it regularly. It's because they will actively support their positions in the market. They will mark price up when the opportunity is present, and they will also defend against supply, at least to a reasonable amount when they can. I like riding on the coattails of active professionals. I can never be 100% sure that I've identified them in the market, but over the years, I've sort of learned to trust my instincts when I see some telltale signs. And a shakeout at the end of an accumulation zone, often they're called a final or terminal shakeout, and a breakout that immediately follows it is often a good sign that active professionals are in the market. They're the ones that have likely been reaccumulating, and they're the ones that are going to drive the price higher if they can. They're at least going to attempt to drive the price higher. And I like to ride on their coattails for short to medium term trades. So price breaks out, and then at a certain level, they shake out, see if there's any sellers in the market. And that's the idea of these shakeouts. They remove sellers from the market. They challenge sellers to come out and sell their positions if they're in the market to sell or they're worried. It's no point breaking out down here and then having to buy the sellers as they emerge. Better off to threaten them down here and remove them from the market, which will make the breakout a whole lot more easier to achieve. So price breaks out up to here, and then it shakes out in response to try to remove any sellers, any day traders who are just going to sell into a continual markup and make it more difficult to keep price going higher. You see the next bar is some sort of test. It's not a great one, but it's traded the majority of its trading below the previous close. Then there's been a couple of bars that are really doing not much, probably just absorbing any supply that's been drawn out. Whenever price makes substantial gains in a short period of time, supply will be drawn out. It'll either be coming from the left, which is people stuck in an old trade. It'll be profit takers from below, or it'll be short sellers from above. But either way, short, sharp gains generally will bring out some sort of supply, and that will need absorbing if the breakout is going to be successful and it's going to continue higher. So then you can see a little period where price grinds its way higher, sort of in the fashion of bullish absorption, and then price breaks out above that level and pushes to a new level. And then you can see that the period of consolidation happens. There's testing in here, a little no demand up bar, and they pull back to test the breakout. And here's the level we're watching. You can see that this little testing and absorption comes in, and then price accelerates higher again. So that's how I'm creating a narrative for this stock. You can see clearly the 2-bar reversal or bullish reversal and why it was there and what it was used for. And then you can see the shakeout here. You can see where it's positioned and why, immediately after the breakout, to remove any extra supply that's been drawn out as prices pushed higher. Okay, hopefully that was interesting and worthwhile. Hopefully you did find the shakeout and the 2-bar reversal before I pointed them out. Thanks for your time. Thank you. See ya.